Good morning, everybody. It's great to be here again, and thank you very much to Richard and Rebecca for inviting me. And we're glad to be sponsors again for this event. Interesting, listening about the growth in the Philippines, our business is a very good example of that. We have been here for 20 years, as Sheila mentioned earlier. The growth in the Southeast Asia region, our business has grown over the past decade over 1,500%, which, you know, if we were listed on the Philippine stock market, the investors certainly would be happy if they saw a company perform like that with growth over 1,500%. That's our Southeast Asia business, which is ASEAN. The best performing office or the best performing country within ASEAN of our business is the Philippines, which is, I think, grown about 1,700%, so above that average. So it's been tremendous, and we serve clients all over the world. And as I always say to my colleagues here when I come to the Philippines, Metro Manila is probably one of the most talked about cities at corporate boardrooms all over the world, because so much outsourcing, shared service, BPO operations are now here. There's hardly a sort of company that's not either here or thinking about here. So it has a big strategic importance. This morning I'm going to try to touch on technology. I'm probably the wrong generation to talk about technology. But I'm going to have a go, and it's something that is affecting all of our lives. It's certainly affecting the real estate industry, and it's a hugely important thing. And it's one thing that we at JLL, we don't want somebody to come and disrupt us. We want to be the person or the organization that disrupts and be in control of that. So we're investing a lot of the profits that we make in technology and trying to lead our industry in that. So it's probably the single most talked about subject within JLL right now. So I'm going to share with you some of the ideas that, I think I was looking at that one. I didn't realize we were already up. So I'm going to share with you some of the sort of ideas that we see and how it's impacting the real estate market. So emerging technologies changing the way we live and work. Well, real estate is where we where we live and where we work. So real estate is wrapped around everything that we do. The automation, artificial intelligence, the rising connectivity, the sharing economy allow us to do more for less. Crowdsourcing information and resources for the wider benefit are all the words that we hear all the time, which are hugely sort of important things. Southeast Asia, we believe these technology changes will be very positive for the real estate industry, and I'll run through our thoughts on this as we go through the presentation. So what are the changes in the way that we live and play? I'm not sure if everybody can see this. Hopefully people can. Well, I'd like to sort of present this in sort of four ways this morning. Work, play, live, and move. These are the four themes that we would like to cover. And with regards to work, we're focusing on the office sector, even though people working industrial units, etc., retail, etc. But for the purpose of this, just to really look at the office sector. Office demand will change due to greater outsourcing. I think the Philippines is a net benefactor of the way that technology is allowing outsourcing now to be done anywhere in the world. So that's one of the biggest changes. The flexible work practices and the co-sharing of space are changing the way all of us work and where we work and how we do it. Play, urbanisation and the rise in middle classes and the advent of online shopping will increase the demand for retail space in Southeast Asia. Many of you might think the opposite, because you would think online shopping will decrease the demand. Well, I think it depends where you are in the world and what is currently there at the moment, and we'll just touch on that as well. Live, home sharing platforms HomeAway, Airbnb are ones that we're aware of, and there's others coming, account for about 10% of the occupied room nights in the global gateway cities in Southeast Asia. That's very small at the moment compared with other cities. And then Move, Waze, Grab, Uber are leapfrogging some of the infrastructure constraints that we're having at the moment, but they're also providing sort of data to ease traffic congestion. And I'm sure here in Manila we would welcome all sorts of technological helping with regards to congestion. So if I can just start off by touching on the economy, if I may. And we've heard quite a lot about the economy this morning, so I'll just sort of touch on just a couple of the points, some of which have been brought up before. Southeast Asia is about 11% of the Asia-Pacific economy and growing. The Asia-Pacific economy, as we know, is the most dynamic and has been the most dynamic economy over the last couple of decades, and we expect it to continue to do. So it's about $2.5 trillion in size. Southeast Asia is expected to continue to see growth. In fact, the projections, if you look here from 2016 to 2020, show that ASEAN will be the third largest or third fastest growing region in the world, and that's behind or should I say in Asia-Pacific, behind India and China. But at this moment, as you know, there's parts of Southeast Asia outpacing those growth. In the ASEAN region, between 2016 and 20, the projection is that the Philippines will be the fastest growing economy in ASEAN. What is happening in terms of urbanization? Urbanization is the huge thing that's been driving the China economy and driving the world economy as well. Just the huge mass of people over the last couple of decades into the cities in China has meant there's been a massive construction boom, and that construction boom has required resources from all over the world to build those buildings, roads, homes, etc. And that will continue, even though it might not continue at the same pace for every city. But we're expecting between 2015 and 20 that the population, urban population will grow by 2.2% in Southeast Asia, similar to China and India. And you can see here there's some projections expected in the Philippines, 1.6% growth in urbanization over that 5-year period. Middle incomes are likely to grow. They've been growing at about 9% compounded per annum, and we expect them to continue to grow. And between 2015 and 2020, there could be 70 million more people in the Southeast Asia region that will come into the middle income group, and that would take it from a current 124 million to 193 million. So that's a size of Japan. 120 million is the size of Japan. So when you put it into that context, you get some sort of idea of what another 70 million people will mean to this. And that will have impacts certainly on the real estate industry. So that's just a backdrop on the economy in Southeast Asia. I'd now like to sort of go on to the themes that I highlighted earlier, and that is work. You will recognize some of the names here around work, some of the symbols and names. Some of them might be new to you, but these are names and companies that are going to play a significant role in the way that we occupy office space going forward. Outsourcing will continue to boost Southeast Asia office demand. That will be a huge contributor to what happens here in the Philippines for sure. But what has happened since the global financial crisis back in 2008, 2009, office demand has halved. Additional office demand has halved in mature economies like the US and Europe. That's particularly because we've seen such huge restructuring in financial services. The financial services industry has restructured itself immensely, and they're big takers of office space. So there has been a drop-off, and that is a theme that we're likely to see. However, in Southeast Asia, demand has accelerated by about 5% per annum, and between 2016 and 2020, we expect that to continue to grow. So you can see from the tables here that if you're projecting forward, or if you're looking at where we have seen demand, I should say, post the financial crisis, then we've seen here in ASEAN 5% growth in office space every year, compared with the period leading up to the financial crisis of about 4%. So there's been an acceleration of demand for office space in the Southeast Asian region, and because of outsourcing. And the Philippines, in fact, actually would have a larger percentage growth number than the whole of ASEAN. Office stock, and I should add that the outsourcing has been made more possible because of technology and the ability to be able to sort of communicate. Office stock is still low in Southeast Asia, so we've got this growth in demand, which is coming from outsourcing. But also, if you look at the current stock of office space in Southeast Asia compared with the rest of the world, it is low. And the table here, you can see that the office stock per capita is about 209 in Sydney, London 1.49, Singapore, which is the exception in Southeast Asia, 1.37. But if we go all the way to here in Manila, it's only 0.43%. Now that is telling you a couple of things. One, it's telling you that in terms of the economy, how much of the economy is in the service sector, a lower proportion, even though it's sort of moving. But it's also telling you that by no means, if you believe that the economy keeps growing, the demand for space keeps growing, the economy moves more and more into a service sector, there is not a large current stock of office space to accommodate that growth. So it's going to be important that the private sector in particular continue to invest in real estate and commercial real estate to be able to accommodate that growth. Upcoming office supply is high, but needed for that growth, as I've just mentioned. You can see here some of the Southeast Asian centres and what they're expecting. The one on the left-hand side, Manila, has, out of all of the major Southeast Asian centres, cities, has the most supply as a percentage of the total stock coming up in 2016 and 2017. Sheila touched on it a little bit, but you can see here in 2018, the estimated supply of new office stock falls off quite considerably in Manila, as it does in many of the other centres, with the exception of Jakarta. But this is, whilst we're seeing a lot of stock coming up in the short term, the demand is still very robust. So the Manila office rents, we don't think will fall, despite there being significant supply coming up. We think demand, and you can see the change in demands with the grey band here on the boxes, will absorb a lot of the supply that comes in this year and next year. And then 2018, we see a drop-off there. BPO occupiers will also not only expand, we believe, but they will move up the value chain and require more centrally located premises. And to a certain degree, we'll probably see that much of that might then move into traditional office space demand, which will be a natural progression. Office capital values in Manila, a little known fact, but the best performing office market in terms of total returns in the world over the last decade and a bit have been here in Manila. That's not something that is widely publicized, but if you look at total returns being the rental income plus the capital appreciation, and you add those together, then Metro Manila has been the best performing office market in terms of total returns. The reason that doesn't get publicized is probably because there's so few foreign investors here, so nobody's picking it up. We pick it up because we're here and we're in all the other cities as well. So if we were crystal balling 15 years ago and we knew what was going to happen then and managed to get some of the investors into the market, they would have done very well. But for those of you that have invested, you will know yourself that it's been a good market to be in. And capital values have gone up greater than the compounded rental growth. The compounded rental growth has been 5% per annum, but capital values, the compounded growth is about 9.5%. Why have capital values gone up more? Because the cost of debt has come down in Manila. And therefore we've seen, or in the Philippines, credit ratings have improved. We've seen, therefore, a compression of yields, which has come about. And you can see the gap between the cost of debt and yields is about 470 basis points at the moment, which is one of the best that you can get, or one of the largest gaps you can get globally. So we've seen yield compression and rental growth, which has driven up capital values to make it such a well-performing market. Coworking. Coworking is something that is having a very significant change. Some of you might already be in the co-working space. We see it developing here. And I think one of the drivers for it is the change in the way that we're working. There's a lot of freelancing work going on at the moment. Technology's allowed us to do that. Freelancing I can describe as, let's say, editing. At the moment, if you want something edited, you can go to a freelancer who might be sat anywhere in the world and can edit your piece of work for you. And traditionally, people in this space might have worked at home, but they're being attracted now to co-working space. Co-working space is also accommodating startups and entrepreneurs who might have worked in another environment, typically maybe at home, coming into co-work space. So, and you can see from the graph here the number of online Upwork freelancing, which drives a lot of the co-working space, is very low in many parts of Asia. It's high in the United States and India, and interestingly high here as well in the Philippines. So co-working is for big and small tenants, and currently we're estimating that the co-working and service office space in gateway cities, it makes up about 1 to 5%, but by 2030, which is only 15 years away, we're expecting it to make up as much as 20 to 30% of office space. So that's a huge shift in the way that office space is occupied. It will also accommodate the fact that we're going to see young people, millennials, etc., often not wanting to work in corporations in the sort of traditional way that we might have worked, but wanting to look at being more entrepreneurial, setting up their own businesses, having smaller businesses. So we think the growth will be up to 20-30%, and in Southeast Asia, by 2030, we expect it won't be as strong, but certainly somewhere around 10 to 15%. And I don't know if any of you have been into co-working space, but it's a community. You go there, you meet other like-minded people, there's infrastructure there, there's often things like health insurance plans. If you're a member of one of the co-working organizations, you can go and benefit from cheaper health insurance for you and for your staff. And there's a community there. If you're there and you're looking for somebody to help you with technology or with accounting or whatever, you've got sort of, you can share things amongst yourselves. So it is a real community in which to work in, and one that we believe will continue to grow. And we'll see a lot of the co-working companies teaming up with real estate owners to do things jointly and jointly invest in some of these stations. Play. Play is certainly something that's important to all of us. Internet, online retailing is something that is growing rapidly and certainly having an impact on the real estate market. In Southeast Asia, internet line subscriptions is low outside of the urban areas. So it is one constraint. So as Southeast Asia emerges, we will see more internet penetration, but it's still relatively low. Consumers are leapfrogging technology in the region. So PCs are being replaced considerably by mobile devices, and people are using mobile devices to shop as well. And a survey in 2015 by We Are Social estimated that 20 to 30% of the population in Southeast Asia bought something online using phones in the last 1 month. And that is the same as what we're seeing in some of the developed countries like the UK and that. Bypassing PCs to shop on mobile phones will continue. And Bain research recently indicated that 50 to 90% of consumers outside Tier 1 cities in Southeast Asia are bypassing PCs and directly accessing online retail using mobile phones. What does that do? Well, what it does is that if people have access to shopping, they're likely to shop more. So if we can go online using our mobile devices and we can see things online that we can buy, we're likely to acquire more. So what's likely to happen is outside Tier 1 cities, more retail space is definitely needed. So even though we're having people shop online, which intuitively tells you there's less need for shopping space, what it is doing, it's actually increasing the consumption of shopping greater than any impact it would have on reducing the amount of space or amount of goods that are sold in shops. So what's happening is technology has enabled more shopping, and that shopping is online, but also what's going on is there's a tendency for people to want to then visit shopping centres, touch, feel, and sometimes order online and pick up online in these shopping centres. What I think online shopping will do in cities, larger cities like Singapore, it will probably reduce the amount of shopping space that's needed. So in the mature cities, you'll probably see the opposite. So developed economies, you'll see probably in big cities that are urbanized, less need for retail space as people shop online. But what it's doing is it's increasing the consumption and the need for more shopping space where there's a lack of outside. We could see also consolidation in the way that the online shopping is being done. There's a recent purchase by Alibaba for about 1 billion of a Southeast Asian retail online shopping, lazada, which you can see here. It's one way to be able to sort of penetrate those markets quite quickly. Live, some names here that are familiar. Less names at the moment, but we'll probably see more coming on. Airbnb listings are growing. They're much less in this region than they are in other parts of the world. And at the moment, they make up about 25% of total available rooms in the global gateway cities. But they're much lower than that in this part of the world. And they make up a much lower occupancy amount. Airbnb is growing. So Southeast Asia listings make up about 1 to 6% of the listings, compared with about 25% in the more developed cities. We will see that change, and we will see that have an impact on the pricing of both residential and hotels as we get a merge between the two of available rates. But there is no doubt that it's increasing the office stock quite considerably. Sorry, increasing the hotel stock quite considerably. So that will have a sort of big impact. If I can just finish off quickly now, there's sharing platform around transportation is a big impact as well. And what we're starting to see here is we're seeing companies that are able to collect information, crowdsource information, let us know about congestion on roads, and help us be able to sort of communicate and bypass some of the infrastructure restraints. We're also seeing, and these companies you can see and you'll know, but we're also seeing more efficient transport use within cities, which is relieving congestion. And I think all of this will help in the urbanisation and the living and transportation that we do in the cities. So finally, just to conclude, I think whilst technology has impacts on reducing, overall it will be positive for the Southeast Asia property market. I think we can be confident that we can embrace technology and we shouldn't be afraid of it. And certainly I think it's something that we will see underpin demand for real estate as we go forward. On that note, thank you very much.